Thank you for joining me. I'm Juan, lead trader and founder of Prosperity Trade. In today's video, I'm going to discuss SMLR Science, ticker symbol SMLR, why I'm bullish on this stock, why I feel they're important for the healthcare industry, what problems are they going to solve, and we're going to take a look at their financials as well as their risks. Stay tuned for this video. SMLR Scientific, currently trading on the OTC market under ticker symbol SMLR. If we look at their chart here, they've been on an uptrend since November. They've been uptrending and they're now trading at $120 per share. They started out down here around the 54, 55, been on an uptrend. There's been some support here. It's bounced off of here, but this is the uptrend. When the overall market dropped, it hit a low of 112. And I was hoping for another $5 or $10 drop and I would have entered, but it didn't hit my entry area. Overall, I still think it's a good buy. I still think it's a good investment, but it does come with risk, and we're going to discuss all that. So SMLR Scientific, they own one patent, one product. It's called the QuantaFlo. So they've had a similar product, their first generation QuantaFlo, since 2011. And in 2015, they came up with their modified QuantaFlo, and it's FDA cleared and it's patented until 2027. So what does the QuantaFlo do? The QuantaFlo tests for peripheral artery disease. So what is peripheral artery disease? In a nutshell, it's basically fatty plaque that's built up in the arteries of the legs. And why is this dangerous? So just like a heart attack or a stroke, there's some sort of buildup, there's some sort of occlusion that's disrupting the blood flow to that organ, like the heart or the brain. So when you disrupt blood flow to any organ, any tissue, any area, it becomes what they call necrotic or ischemic, meaning it's deprived of oxygen because the blood carries oxygen. So any blockage is always bad for any part of the body. Let's talk about PAD, and we're going to call it PAD from now on instead of peripheral artery disease. PAD, if you have PAD, it increases your chances of heart attack. It increases your chances of stroke, and that's according to the American Medical Association. It's a predictor of stroke and heart attack. It's also highly undiagnosed. Now, the reason it's highly undiagnosed is because most patients, they come to the doctor's office and they're asymptomatic, meaning they have no symptoms. They don't go there with the classical pain in their leg symptoms, the sores or ulcers or anything that would prompt the doctor to check for PAD. But this is where this device of theirs this is where this device has an advantage. They estimate that 75% of PAD patients are asymptomatic. Primary MDs often miss their diagnosis for the reason I just mentioned. PAD sufferers have a 21% increased heart attack, stroke, and hospitalization or death within 1 year. If you have PAD, you're just going to increase your chances of heart attack, stroke, and as you get older, you're more prone to being diagnosed with PAD. They state that 1 in 5 people over the age of 60 have PAD and 1 in 2 people over 85 have PAD. So early detection may mean more preventative care. So the good thing is if you catch it early, it can be treated with medication, I guess some sort of clot busters. It's over time as it gets worse that they may have to put like a stent or even more extreme, a bypass, kind of like bypassing the occluded area. So they have other studies that shown that people with PAD are 4 times more likely to die of heart attack and 2 times more likely to die of stroke. The SAGE group has estimated that over 20 million people are affected with PAD, and that's what we mentioned before, and that's in the Journal of American Medical Association. And like we mentioned before, it's underdiagnosed because many people affected with it are asymptomatic. They don't have the classical fatigue, heaviness, cramping, pain, foot pain, sores, wounds, ulcers, slow healing, etc. They also had a study by the National Limb Loss Center, and they estimated that 2 million Americans are amputees, and over 54% of them had vascular disease. So we know that PAD is a big problem that needs to be solved. Obviously, the traditional way of testing is not doing its job. So this is where QuantaFlo comes in. QuantaFlo products can be found with healthcare insurance plans. They're found in integrated delivery networks. IDNs are basically organizations or groups of doctors, healthcare providers that have some sort of ownership or formal agreement, and they have like healthcare facilities, hospitals, groups. They just form together. So these physician groups can use them. Their product can be found in risk assessment groups, in doctors' offices. Their largest business is a healthcare company that has affiliated plans, and that's about 47% of their revenues. That's one of the risk factors also, that they have such a large percentage in one company. Sales are done by a salesperson and distributors. They have a distributor called BARD, but that accounts for less than 3%. Their product is manufactured in the US. However, the manufacturer does get some parts from China, but they are positive that if they're not able to get those parts, that they can easily manufacture it here in the United States without the parts from China. Their R&D they have dedicated engineer consultants, and they've sponsored several studies that showed positive results and accuracy using QuantaFlo. What's the incentive for using QuantaFlo for the doctors? First, there's two ways doctors get paid. They have fee for service, which is a kind of like their services are unbundled and paid separately. So that would give them an incentive to provide more treatments because it's dependent on the quantity of care as opposed to the quality. And the other incentive is capitation. Capitation is basically a payment arrangement that physicians or groups of physicians, they get a set amount for each enrolled person assigned to them over a period of time. So that set amount will increase if the patient has a higher risk factor or it's just a sicker patient. So a patient that's diagnosed with peripheral artery disease, they're going to get a higher amount under the capitation structure. So the traditional testing for PAD is the ankle brachial index. And it's basically taking a blood pressure cuff. And the same way you take a blood pressure in your arm, you keep squeezing, and the whoever's taking the blood pressure keeps squeezing until the pulse stops. And when the pulse starts again, that's the systolic. So they're listening for the systolic. They have these numbers that they can tell that if there's some sort of occlusion. But they have to do this with the Doppler, and they do this on both arms. And it can't be done. It's usually not done in the doctor's office. It usually requires a special appointment. It's by a trained technician usually. And the device, it can cost a few thousands or up to 20,000. And it can take as long as an hour, but most of the time it's a lot shorter. So this is the traditional way. So this is why it can be undiagnosed, because it's a procedure. It's not something that the doctor usually catches. But the incentive for using the QuantaFlo, and this is I'm sure like one of their sales pitch, I would think if you're a person that's over 50, if you're a person that smokes, if you're a person that's prone to cardiac diseases, if you're a person that's had a stroke in the past or a heart attack in the past, if you're a person that fits in any of these criteria, if your race, whatever it is, that you're highly susceptible for PAD, you can just have the medical technician perform a QuantaFlo examination. The same way the medical technician or the nurse or whoever sees you first before the doctor sees you, they take your blood pressure, they ask you your symptoms, they ask you if you have allergies, they take your weight, your height. If you're a person that fits one of these criteria that are susceptible to PAD, then let them do a quick PAD examination. This thing takes a few seconds. The same way they take your pulse ox with a sensor on your finger, it's the same concept. So the medical technician, all they have to do is put the sensor on your feet and hands on one side and then on the other side. And their patented software, it gives you a reading, a waveform, and it basically tells you if there's flow obstruction or no flow obstruction. It's that easy. And I think that's going to be a strong pitch. I mean, you have over 400,000 doctors, primary care physicians in the United States. Why wouldn't any of them want to have this? Especially if they don't have to buy the product. They just have to pay for the software. They can do a monthly service. And if they're in an area that has elderly people, they would definitely want this device. So their market opportunity, like we mentioned before, their software, they have a monthly fixed fee or a per use fee. About 2/3 are the monthly fee, and the other 1/3 is the usage fee, per use fee. Worldwide, it's estimated that there are over 200 million people affected with PAD. So that's a potential market. They estimate that in the United States, there are over 80 million people that can be tested, and 20 million of them are going to have PAD. We mentioned before that there are more than 400,000 primary care providers in the US that can benefit from this. There are also over 335,000 professional practicing primary care facilities in the US, and there's also over 20,000 cardiologists, 7,500 vascular and cardiovascular surgeons. There are also millions of diabetic patients seen routinely by endocrinologists. These are all potential market opportunity that they can market to. There's also specialists like podiatrists, orthopedic surgeons that can benefit from this, neurologists, nephrologists because their kidney patients are prone to PAD, wound cares, just to measure lymph perfusion. And they also estimate that a lot of physicians are going to see elderly people over 50. The 50-year-olds are prone to PAD. It could also be used for evaluating many symptoms and conditions. They've talked about in their 10K and their 10Q that they've invested. They haven't given specifics on the companies that they invested. They have this statement in their 10K in their 10Q that they invested in 3 companies that are developing products that may allow Semler to expand their current products offering QuantaFlo for PAD. In addition to their internal research and development efforts, their product deal with better chronic disease management. So that's one hint of what they're investing in. And it may be used by primary care practitioners. That's another hint. And are FDA cleared or equivalent. So maybe some sort of European clearance, product positive clinical data, and 2 of the 3 products seek to improve aspects or sequela of the metabolic syndrome. And that's the biggest hint to me. So what is sequela? Basically, sequela is a consequence of another disease. So I think of the diabetic, right? The diabetic would benefit from, it's the closest thing to SMLR because of the blood flow. Their feet, poor blood flow to their feet because of diabetes. So I think that's the hint, that's the clue. They didn't give specifics. That's what I feel like they're meant, maybe invested, something that has to do with diabetes. These are a few questions I asked their investor relations. I asked them, why are you still trading on OTC? They said, we last said that we hired a consultant to guide us on uplisting. So that's going to be a catalyst for sure. That's going to be a catalyst once they go on the NASDAQ or wherever they're going to go, getting off the OTC. So why is the OTC such an issue? First of all, the spreads are ridiculous sometimes. Sometimes there's $2 to $3 or $4 or $5 between the spreads. So you jump in a position and you're already down $3 if you wanted to get out right away. But this is not a company that you would want to get out right away. Also, everything is more illiquid. So sometimes it's just harder to get out of position. And those are the risk factors with OTC. I don't trade on the OTC, but this is a company I would make an exception for. I asked about their plans once their patent expires. They haven't commented on this, but they did state that they're continuing to enhance their products. And they've also shown that they've invested in other companies. So that's kind of like a positive. I asked them, how do they sell to their insurance plans? And they have C-suite level salespeople who calls on the plans. And do the insurance companies use it to assess patients, or how exactly do insurance plans use it? The insurance companies place the QuantaFlo system in their Medicare Advantage doctor's office to use it on patients. So that's a great sign. You want the insurance to recognize that this product overall is going to save them money. If you can catch PAD early, you can treat it with medication. And it won't lead to amputation. It won't lead to a heart attack. It won't lead to those expensive diagnoses. So this is, to me, because of that, because it's so easy to use, because it's a no-brainer for any insurance company to pay the doctors and promote this for doctors, encourage doctors to use this, I think they're in great position. I wanted to point out some highlights from their finance, and we're going to go over finance real quick, but they've had like an annual increase by 18% of revenue. They've blown out estimates year over year. Every year, the analysts give an estimate of what they think they're going to make in revenue, and they've always blown it out. Their revenues have increased over 18% since last year. The cost of revenue decreased. Total operating expense has increased $0.5 million. So they are on an uptrend financially, and fundamentally, they're pretty strong. They're a growth stock. So I mentioned that because if you look at like their P ratio, the P multiples and the PS multiples, you would think, okay, this company is way too overvalued. But I think that it's justified. I think their price is justified because you're paying for tomorrow, and not today. Today, if you value it, and I respect value investors, and most of the time I do appreciate the value investing approach. This is not the value investor approach. You're not buying a dollar company for 50 cents. This is definitely not there yet. But this is a company that's solving a problem. They're in great position. They're ahead of the game. If it's a race, they're way ahead. And I expect this eventually to get a little bit more crowded and have other companies that are going to censor for PAD, but they're going to be ahead of the curve. They're going to be ahead of the game, and they're going to be a trusted name that's out there already. In the last year, over 120% increase. So they're on track. They're gaining money, they're saving money, they're taking care of their liability versus assets. They're doing all the right things. So I think it's a strong case to invest in this company. And this is just a chart. If we look at it here, in 2013, their excess returns, and it's continuing to increase to 2018. They've had 109 excess returns, 202%, 126%. And you see the WACC way down here. So usually if the WACC is higher than the ROIC, that would tell you that, hey, maybe this company is overvalued. But that's not the case here. So we also have to take into account the profitable investment opportunities. There's not a lot of competition, so they're going to be a big part of this investment opportunity. They estimate that the PAD market was estimated to be over $4.53 billion in 2019, and it's expected to thrive at a CAGR of 6.2%, to be valued over $8.7 billion in 2030. So there's still huge growth potential. So some of the risks, obviously, we mentioned that they have to depend on FDA clearance for any product, of course. They don't require any customers to enter long-term license or maintenance contracts for our products, but that's not the worst thing. I mean, if they have a strong product, I don't see why anybody would not want to use their product. The biggest thing is they trade on the OTC competition. If they become, super profitable or more profitable, I expect more people to step into the space. There's already companies that are starting to step into the space and censor for these things, but they're still ahead of the game. The biggest risk to me is that they depend on few clients to take large percentage of the revenue. That's always scary, especially at a stock that's trading at $120. And if you wanted to buy 1,000 shares or whatever amount it's a large amount that you're investing. So to invest in a company that is depending on just a few customers, it's always nerve-wracking. But they're expanding. I really anticipate and feel that they're going to continue to expand and continue to get more business. Okay, so let's take a look here at our DCF. So as always, I give a bullish, bearish, and base case. So we'll take a look at the bearish case. The bearish case is that they've had 45% in sales 2021, which they're going to achieve, increase in revenue growth. So let's take a look at the bearish case. I always like to look at the bearish, base, and bullish case just so you can know your risks. So we have these three numbers. The bearish is the bottom, base, and bullish up here. So we're saying 2021 that they're going to have a revenue growth of 45%. Then 16%, 16%, 12%, 10%, 6, 4, 2, 0, 0, 0, 0. So they're not going to make money. They're going to be out of business in the future. And obviously, after 2027, 2028, if a company is going to be established that long, we always expect the revenue growth is not going to be as drastic as the 40s and 50s. But let's say that happens, that they, in 2027, there's too much competition and they don't have any more revenue growth. So if that's the case, if they don't have any more revenue growth in the next few years after 2027, then the risk is that it'll drop to an intrinsic value of $77. And if you're bullish on it, like I am bullish on it, I think they will achieve these numbers. Then we'll say, okay, 58% in 2021, 27% revenue growth in 2022, 23, 19, 17, 13, 11, 9, 7, 7, 7, which isn't even that crazy. I still believe that they can have that type of revenue growth. It's not unrealistic. Cost of revenue, 9%, and we're just kind of going market average. So if they are achieving those percentages, which I do believe are realistic, with all the other things coming into factor, I would say that the upside potential is a whopping 53% upside potential and a price target of $83. And that's my price target, $83. I think they will reach this. It's going to come with those risk factors that I've mentioned. They're on OTC. This space can get crowded. If there's any issues FDA wise and one of their products or something doesn't get approved or there's some sort of issue, that can ruin them. But the type of FDA approval that they have to get, it's a different type of classification. It's not a risky drug or nothing risky. It's not a risky procedure. So I don't see them having any issues. We don't even know 100% the specifics of who they invested in. So that's also another potential catalyst. So there's catalysts for this company. There's the catalyst of talking about who they invested with, the NASDAQ listing if they get listed, and just overall sales going up and doctors realizing that this is something that they should have in their doctor's office. So that was my due diligence. I spent a lot of time researching this company. I read last 3 years, their 10K, last 2 years, 10Q. I listened to all their talk, listened to their quarterly talks. I contacted somebody from investor relation. And I think this company is going places. I think that they have a lot going for them. I would like to see possibly a pullback. If there is a correction, this company can, pull back a little bit. Just a couple of days ago, the overall macro of the market dropped and they dropped I think about 7% and they quickly gained it back. So if there's an opportunity, if this thing drops, if there's some sort of correction in the summer, like some people are predicting, then this is a stock you want to have in your radar. If it gets below 105 in the 100 support area, you definitely want to add this to your portfolio. Because I think, once they get listed, once they get more contracts, once more doctors start using this because they see the benefit and how easy it is, they get their salespeople out there. This company, it has a lot of potential for it. Please look out for a Tom Nash video. He's going to do a video on this, and he interviewed me and asked me some questions. So I look forward to seeing that. And thank you for joining me. See you on the next video. Please don't forget to like, subscribe, and comment. Thank you.